Everybody, Dave here, Hidden Freedom Investing, and welcome to another video. In this video, I want to do a dividend update for the month of April. A lot of dividends have been received. There's been some change to the dividend portfolio, a lot of capital reinvested, a lot of capital, just brand new capital put into the portfolio as well. So let's go ahead and go through all those updates today. Let's go ahead and get started. All right, we just saw the Dividend Mountain update there, and obviously there's been a little bit of progress there. We're getting so close to that $500,000 mark for the dividend portfolio, and that hiker probably will sit on top and enjoy a little bit of lunch and just enjoy the view. But maybe we will be able to break that number in May. I'm not really sure. We'll see. Hopefully I can. If the market cooperates, it should be no problem. We may have to add some new capital, I'm not really sure. But anyways, it is making progress. We're almost there, and that is pretty darn good considering this portfolio really started in January of 2020. So we're only, just over a year and like 3 or 4 months or so, and we're already at $500,000. Obviously, a lot of that capital is coming out of real estate notes, which we'll talk about here in a second. So let's just go over the overview here. And 2A, just like I say in pretty much every one of these videos, all these spreadsheets that you see in this video are all available if you want them. Just see the pinned comment, or you can see in the description, there's a link in there. And then also brings us to 2B here, roughly still $456,000 left in real estate notes. And that is partially the reason why I was able to build the dividend portfolio out pretty quickly, because I still have a lot of capital coming out of there. We already got one note that got paid back this year, and I think it was 2 last year. And I would suspect that we'll probably get another one get paid back this year as well. I think there's still 7 notes left. If you want to see that promissory note video, you can take a look at it up here. And I kind of talk about, what those are and how they work and all that stuff. A lot of people have been hitting me up on that video specifically. So there's still $456,000 left. And as those get paid back every single month, the dividend and interest and all that, excuse me, not dividend, just interest and principal gets paid back. That usually goes into the dividend portfolio. So the dividend portfolio is still growing off of that, plus off the dividends being reinvested, plus I actually add capital sometimes from options trading. But if one gets paid back early, like one was paid back, about a month ago, I usually put a big chunk in the dividend portfolio. That brings us down here to 2C. If you want to support my second channel, I talk about a lot of stuff preparing for FIRE, financial independence, retire early, kind of leading up and what I'm going to be doing, kind of the planning process and all that stuff. Stuff I don't really share on this channel because this channel is kind of really dedicated for investing. I will just kind of share the finances after I FIRE next year. I just want to share, kind of more stuff, what's going on behind the scenes, and that channel is what that channel is for. So if you're interested in supporting me on that channel, go ahead and see the first pinned comment or see the description. So that brings us to the dividend overview page here, and so let's kind of just go through this here. Right now there's 2 accounts, all right? One's taxable and one's tax deferred. These are my dividend portfolios. We have right now $485,945 across the 2 accounts. And right now this brings in roughly about $21,870 in annual income. Monthly income is at $1,822. And the daily income is just the monthly divided by 30, so we get $60 there. And if we wanted to kind of figure out what our hourly would be, we just divide that by 24, and we get $2.50 an hour. So that means I'm making money while I'm sleeping. At this time, the dividend portfolio is up $64,799. That's a 15% gain, a little over a 15% gain. Account weighted dividend yield is 4.5%. That's coming up, and we'll tell you why here in a minute. Account yield on cost is 5.19%. Average weighted 5-year dividend CAGR is 5.5. That's dropping, and I'll tell you why. Average weighted beta 0.89, still pretty defensive. And then we got the average beta here 0.80. 27 positions, and the number of shares is 8,470. And that brings us to current net worth, which I always do a net worth up video, which you can see the last one up here if you're interested on kind of where all the rest of my assets are. 1.739 million, and hoping I can get to 1.9 to 2 million by the time I retire next year in April. If the market can cooperate, I think I can hit definitely 1.93, 1.95, somewhere around there. If the market really cooperates, we get another 10% or so, I might be able to hit that 2 million mark. And right now, this dividend portfolio does have a goal of $1 million. Like I said, a lot of that's going to be coming out of the real estate notes to go in here to fund this, but we'll be funding it off of other ways as well. So right now there's $513,000 left to hit that $1 million goal, or 48.6% to the goal. And you got the fire days left down here, 337 days left. And I think when I started it was like 480 or something like that. So it just keeps ticking away, and it's basically just knocking at my door saying, Dave, you need to get ready to fire, and there's a lot of work still left to do. Going back to the agenda here, we got dividend increases. Go ahead and look at the dividend increases for the month of April. So we're looking at the dividend portfolio, and there's quite a few dividend updates, dividend increases. So we'll go through them one by one here. Right now we have one here on Chevron, a 3.88% increase, all right? And that is slightly less than what we'd expect, quite a bit less, I'd say. Well, the 5-year dividend CAGR is right in line, but you think we get a little bit more than that. But at the same time, oil kind of got hit pretty bad last year, so we'll take whatever we can get. So let's go ahead and clear that flag. Dividend, all right, 5.36, clear that flag. Next dividend increase we got here is on Southern Gas Company, or Company Gas, Southern Gas Company. I guess it's the same thing, I'm dyslexic, I bet. So 3.13% increase there, which is pretty much right in line. So that we're good there as far as I'm concerned. So let's go ahead and clear that flag, 2.64. All right, we cleared that flag. Next one we got here is on Procter & Gamble here, which is 10% increase. That is amazing. Wow, I mean, that is like double what we normally would get out of Procter & Gamble. I probably should double check that to make sure that's right, but I'm pretty sure it is. Still, that's double what we expect. That's amazing. So let's go ahead and clear that flag there. That's, let's see, 3.4792, 3.4792, clear that flag. All right, it's cleared. Let's scroll down here. We got another one here on Apple. And Apple, 7.3% increase. I mean, that's a little bit less than what we'd expect, although the last 1 year was, what, 6.25. We expect it to be around 8 to 9%. I think last year was pretty healthy, but I can't believe Procter & Gamble beat out Apple at this point on the dividend increase. And what is Apple thinking? I mean, they got so much money just laying around. You couldn't just increase it by 10%. I mean, give me a break here, right? Still not going to complain, when a lot of other companies are cutting and stuff, or not even, just putting a penny out there or something. And, I mean, it all helps in the end, but it is what it is. Let's go and clear that flag there, 0.88. All right, we cleared that flag. The last one here, it looks like we got Johnson & Johnson. So that was a 4.95% increase, which is a little bit less than what we expect. But it was, like I said, last year was a pandemic, that puts them at 59 years of dividend increases consecutively. And what was Apple? Just curious, their Apple's at 10, so they have quite a ways to go yet. But so 4.95%, a little bit less than what we expect, but I'm not going to complain. Johnson & Johnson was a key part in the pandemic, but let's go ahead and clear that flag there, 4.24. All right, last flag was cleared, so all the dividend increases have been taken care of. For future videos, please go ahead and like and subscribe and hit that bell notification. So that brings us to the sells for the month of April, and this is where some of the changes came in effect. So I did sell $38,000 worth of stocks here, and I pretty much closed out Verizon. I closed out Coca-Cola. I closed out ED, sold a little bit of Pfizer, and also sold some VYM there. and just kind of rendered a little bit of profits in some of those. So it was about $5,000 in profits. That was short term on that side, and a little bit long term at $375. So I did sell a little bit of stuff, closed out Verizon, closed out Coca-Cola, and closed out ED. And we'll go through the portfolio here on the buys just to look here in a minute. And here we are looking at the buys for the month of April. So here are the buys. So some of that capital that I took out, that's $38,000 of capital that I sold off. Some of that went into JEPI, some went into DIVO, some went into NUSI, and some went into T. And you're thinking, okay, well, I did get rid of Verizon. Well, a lot of that capital went back into T. I just stuck with T for the communication sector, and I rendered some profits in VYM. Ended up building out a little bit of DIVO there, so I just wanted to get a little bit of money out of VYM, put it into DIVO because I completely abandoned the strategy of selling covered calls against VYM, and I stuck a lot of that capital back into DIVO there where they're doing the covered calls for me. Pays a little bit higher yield. I may cut a little bit out of the upside on the appreciation side, but I don't have to deal with doing covered calls in VYM, which wasn't working very well. And so that was part of the strategy going forward. Obviously, I also deposited about $30,000 of new capital because of the note being paid back in April. So there was roughly about $30,000 that went new capital that went into the portfolio. And I bought JEPI, bought a little bit of NUSI there with the proceeds from Coca-Cola and ED, and kind of just moved the capital around there. So the total stocks bought was $70,927. And so that is the plan so far going forward. Maybe we'll talk about it here in a second if there's enough time at the end of the video. Otherwise, we'll make a special video for it. So here we are looking at the dividends received for the month of April. So we received 7 total dividends for the month of April in the amount of $1,224.96. Received a dividend on Coca-Cola. That would be our last dividend on Coca-Cola unless the stock drops, I want to pick it back up. Right now we receive $42 on Coca-Cola, KMB, which is a pretty good price right now. And if you want to look at that last video I did up here, it was actually in the top 5 dividend stocks for May. So look at that video up here if you want. And that right now we received $88 in dividends from KMB. We received our monthly dividend in Realty Income, $34.55. We received our monthly dividend in NUSI, $728. And that's a pretty darn big one. Whether you call that a dividend or not, it's a distribution. It's part of capital return, part of covered calls. That's just a caller, but part of options income and capital return and all that. But that's comes in every month and will continue to. Probably won't be building that one out anymore for right now. We'll probably be building out maybe JEPI and DIVO, but $728 went back into NUSI. We got a dividend here on JP Morgan, $85 there. We got a dividend / capital return / covered call income on DIVO there of $126. And we got a we got a dividend here on Altria at $119. Next thing we're going to do is we're going to write all those dividends received across the month of April right here. So we'll run a script to do that just to make my job a lot easier, and we'll go look at those after we're done. So we got the dividend chart here. Let's bring up the script. All right, let's go ahead and start the script now.
Takes a lot of balls to golf the way I do.
All right, the script is finished. It updated basically that line in my Google Sheets. So we also saw the dividend meter go up there. We're at 53.40 on the year now. Let's go back to the portfolio here. So dividends received, and there are all the dividends there. So DIVO, NUSI, Altria, DIVO, NUSI, Realty Income, JP Morgan, Altria, and we got KMB over there. We got a couple on the side over here. Let's see here. We got one on Coca-Cola, which is red. I made those red because those got closed out. So all these ones in red here I do not own anymore. And I won't be receiving any more dividends from those unless I want to add them back in the portfolio, which who knows, if the stock gets cheap enough I might add it back, but we'll see. And let's just make sure, so 1224, that equals that, and then 53.40, okay, so everything looks good there on the dividends received. And that brings us to the dividend charts here. So right now we got dividends by month. And there's April right there, $1,224. Kind of small compared to the last month, but that's one of those big months there. That's when VYM and all that stuff pays. So, but it was still bigger than February, and that's, you know, the addition of the capital I've added in addition to all of the dividends being received and reinvested as well. So let's scroll down here. We got the dividends by quarter. Right now we're in just starting Q2, and we've already almost clipped what we received all of Q2 last year. So just this 1 month, we received almost as much as we got almost all of last quarter, or Q2 of last year. So then here we got the dividends by year here. And we're already, through 1 quarter and 1 month, and we're getting close to what we received in 2020. And like I said, I started the dividend portfolio in January of 2020. So in this year, we're projected to get about $18,000 to $20,000 in dividends, unless I get a lump sum of money coming from some other source or whatever. Like that now, we're $18,000, $20,000 or $21,000, $18,000 to $21,000 by the end of the year. That brings us to the allocation. I updated this over here on the right hand side. So just to kind of look at the allocation from the stuff that I recently sold. So consumer staples is still high, but some really good stocks in the consumer staples sector. So that's the reason why it's so high. I did sell out of ED, and I kept Duke, and I kept Southern. So that's the reason why utilities dropped. And I'm pretty happy with the utilities. Still double almost what utilities over here for the S&P 500 is. So we're still good there. Financials is at 6.6%, which is kind of low considering what is over 11% over here. That's just JP Morgan. Healthcare at 14.5%. That's just because AbbVie's went on a run. I might actually sell a little bit of AbbVie and just dump it in maybe into materials or something like that. I don't really know yet, but I might just rebalance the healthcare just a little bit. That is a little bit high compared to what we have over here, so it wouldn't take very much. Probably $1,000 taken out of AbbVie or something like that. Materials is kind of low. I only have 1 stock in materials if I think, yeah, it's just 1 stock, APD in materials, which is a little bit low, but not too much, 2.7 to 2.1. Real estate's a little bit higher than it's just realty income. Energy is just Chevron and ExxonMobil, which is a little bit high, double, but I think oil is still going to make a run as transport and all that and international travel comes back. Industrials, there's 2 stocks in there. And that's Caterpillar and or Triple M, 3M. That's 8.6%, and right now that's pretty right in line. Consumer discretionary at 9.6. We're about low in that side there. Home Depot and what else I got there? Starbucks and some other stocks. Communication services 6.1%. I got rid of Verizon, which is fine. I just kept AT&T. I'm keeping the best of the best. That's the reason why Coca-Cola went away, in my opinion, and why I, continue to hold Pepsi. And then that brings us down here to the last one, information technology at 17%, which there's 2 stocks in there, and that's just Apple and Microsoft. So let's just go through the portfolio real quick here. I'm not going to go through everything. I'll actually probably just do a separate video on it because I want to talk about VYM here, NUSI, and DIVO and JEPI because I've been building those out. NUSI right now has $109,000, and of course it's been on a little bit of a sell-off in the last few days. And I don't really have any plans of adding any more capital to that right now. And then VYM, I love to actually just render a little bit more profits out of VYM. It's up 27%. And maybe just draw that down to about 50 or 60,000 and then dump a lot of that into DIVO up here, which is going to do the cover calls for me because the cover call strategy just wasn't working as well as I wanted it to. It just kept going in the money and causing me to buy it back because I didn't want to render, $18,000 in capital gains. So I might render small profits out of that. I'm already at $20,000 of profits this year. And that's outside of my, that's just capital gains alone right there, not even including my options income at all. So I gotta, pay taxes on that, right? JEPI there, and we got 34,000 in JEPI, which I'll continue to build out as well. If you want to know anything about NUSI, JEPI, or DIVO, please see my buddy over here at GW ETF channel. Matter of fact, I'll actually link his last DIVO video up here, okay, because that's one of the very last stocks I just got into, and he just did a video on DIVO. If you want to take a look at that video, go ahead and take a look at it. And Jerry's got a lot of information out there on NUSI, JEPI, and DIVO. Just do a search on his channel and you'll see all of those ETFs on his channel. And that brings us to options income, which I do a live stream with Jerry every single week on Sunday evening. If you want to take a look at that last stream, you can look at it up here. I made $6,000 and a little over $6,000 in the month of April in just an options income, mostly almost all cash secured puts. Didn't do any cover calls at all against any positions in my dividend portfolio. I kind of abandoned a lot of that stuff and moved on to doing mostly just CSPs and then letting the income ETFs take care of all the cover calls for me. And here are all my positions in Schwab. Basically, I'm showing this because I've had people complain, or just one person really, basically thinking I didn't really have any of these have these real positions in Schwab, so because I always show the Google Sheets, but here are all the positions actually representative of 2 accounts, so this should look like very similar to what my Google Sheets looks like. All right, so there's all the positions there. And then there's all the ETFs at the bottom right there, the 4 ETFs. And then there's all the individual positions. And if I actually expand this out right here, you'd actually see 2 different accounts right there, which I'm not going to expand out because it shows account numbers there. How did your dividend portfolio do in the month of April? Go ahead and like and subscribe and hit that bell notification. That brings us to the dividend projections for the month of May. And it might be a little hard to do just because it looks like they're not calculating the JEPI dividend there for some reason yet, or whatever you want to call it, capital return or options income that they sell against those ETF positions. There's the ETNs in there, but so right now, May, they're projected about 1170. Oh, that's actually remaining. So 1170 plus the 227 there. So should be more than what we received in April. And for some reason, like I said, against, let me see, estimated, see if we scroll down here to JEPI, see how zeros right there? So they're not projecting my JEPIs for some reason. And I do get quite a bit of capital from JEPI right there, $2,360 I should be receiving from JEPI per year with the amount of capital I have in there right now. But they're projecting 0 in there. So that's the reason why these numbers are off right here. If we go to the next 12 months, see it shows 1624, and my dividend portfolio overview page shows it at 1822. I don't know why they're doing that. They're still paying me my capital distribution, so I'm pretty happy about that, but these numbers are kind of off. So, but June will be another one of those big months, $2,993, which I think is off as well because there should be a JEPI in there, so it's going to be higher than $2,300. Probably going to be like $2,500 to $2,600 is my guess. Go ahead and take a look at some of those links I threw in this video if you want to look at some of that information. I will probably try to do an update on some of my strategy behind some of those ETFs there. So that's the update for the month of April. If you have any comments, questions, or concerns, go and leave me a comment below. You can hit me up on Facegram, Twitter, shoot me an email if you want as well. So until next time, go ahead and please like and subscribe, and we'll see you next video. Thanks for watching.